Hello everyone, welcome to Mark's Finance and Fitness. I thought it would be fun to go over what I'm planning on buying in September. I think the market is, overvalued in a lot of areas, but I think there's still some deals out there. And also, looking at my portfolio, I definitely want to keep my allocation at my goal levels. So there's certain sectors I want to boost up, certain stocks I want to buy more of that maybe I haven't bought in a while, and I want to share that with you. I also want to know what stocks you plan on buying and why. So let's just jump right into this. First stock is going to be Johnson & Johnson. Now, I really think the healthcare sector is one that is going to just keep on booming for the rest of my life with the innovation and new technology that comes in the healthcare sector. That means there's going to be more treatment options for various things. And I think it's just going to branch out into all areas healthcare. And so Johnson & Johnson is a company that's very diverse. They have a lot of products and brand names underneath them. And so it's one that I think will be around for the rest of my life, which is why I plan to add more. Not only that, if you look at these analysis, there's a low projection of $183 per share and a high of $200 per share. Right now, this stock is at $172.93. So it has a lot of good upside potential. I think it's a strong, diversified company. And so that's why I plan on buying it. Also, if you look at their revenue, it stays pretty healthy. It's not, high growth quarter to quarter, but it's a huge company, and companies that are big, it's just harder to grow that revenue like a medium to small size company. And so this is why I'm buying Johnson & Johnson. My next stock I'm going to buy is good old Coca-Cola. With Coca-Cola, I see here just a sturdy company. And I do see some upside potential with this company. I think you look at Pepsi, they're very well diversified in products, where Coca-Cola, not so much. But I think that gives them an opportunity to explore those areas and possibly diversify with good products themselves. And that's what I like about this company, is it's very sturdy, it has a great, sturdy growing dividend. And as you can see here, the analysis is that the low is $59 and the high is $65. So it has great upside potential, as it's only at $55.65 now. And so I plan on buying this. It's a company I see that's going to be around for the rest of my life. And so I just, I really think that this is a strong one to have in your portfolio. Now, if we look at revenue, there has been some decreases with revenue. But like I said with Johnson & Johnson, when you're a huge company, it's really hard to grow that revenue quarter after quarter, but they still make a lot of money. They are still a very strong company that is recognizable and that I think will be here the rest of my life. And so I take all things into consideration. It's never good to see revenue go down and up and down. Like, you want to see it like a Microsoft where it just keeps on going up. But where I give Coca-Cola the break is that it's such a strong, recognizable brand, and it has potential to diversify even more than it has now, and I think it will. I think it's a smart company with smart people that work for it, and so this is why I'm buying Coca-Cola. The next company is in real estate, and that's good old Realty Income Corporation. This company is kind of like a Coca-Cola. It's just a steady REIT. It has good tenants, and look up their tenants. They're good, strong companies that rent from them. And so they have a low projection of $70 per share and a high of 81. It's currently at, I think, $71 and some cents. So it's at the very low range of the analysis. And I think with I think there will be a time where it's going to be a lot more highly valued with not as much upside potential. So I think now is the time to add. And with you look at their revenue, this is what I like to see, just good, steady revenue growth. And I think that will continue. I think that this company is just very good at what they do, and it's very reliable, a very good monthly paying dividend company. And so I just really like this REIT, and it'll be a staple in my portfolio probably for a very long time, if not the rest of my life. The next one is also a REIT. This one's my newest one, that's VG Properties. Now this one is, different in that it's a newer company to the stock market. It's not diversified like the other companies. It's very centralized in the Las Vegas Strip area and also in the casino entertainment industry. So there is some risk if something happens to Vegas or casinos in general. But in my analysis, I just don't see Vegas ever dropping from that #1 spot as an entertainment destination for adults. And I think that when I'm old, it'll still be one of those places that people just flock to. It's just going to be that place that it's just going to be the Vegas. It's Vegas that it is now, and I think it will stay that way. They're building so much in that area. They're adding sports arenas, newer casinos, new entertainment type things. So I just think Vegas is a strong bet, and this stock is part of that. Now you'll see it has a low rate. The analysis think that this stock price can go as low as $33.50 and as high as $48. It's currently at $30.54. So there's a huge upside potential, and I think that I am going to be adding the heaviest to this one out of all of today's stocks that I'm talking about in ETFs. So Vici, I love it. I just did a video on it. Please go see it. I'm very bullish on this, but just please know that it is more, it's not as diversified as my other companies in my portfolio, but I just have a very strong belief that what they're doing is a good bet, in this entertainment REIT industry. So Vici is one that I'm buying. Now let's move into some ETFs. Oh, real quick, let's look at Vici's revenue. They've only been around for, they have like 2 years of history, but they are growing, and that's what you want to see in a small company, but we'll just have to wait and see as time goes by. So the next one I am buying is an ETF, and that's a financial ETF, FNCL. With this one, I just really want to boost my financial sector in my portfolio. I think that's a goal of mine. I mentioned in one of my last videos. I think I just don't have enough invested in this sector that I really believe in. And so you can see the top 10 here. These are all fantastic financial companies. I own Bank of America separate as well. And this one is just got a low expense ratio. It pays a small but decent dividend. And so I think this is my way of investing in the financial market. It's a diversified, safe way to put in an ETF like this. And Bank of America has some decent upside, but also has some decent downside. So that's why I'm adding to this instead of that stock. The next one, ETF, is FREL, F-R-E-L, real estate. Again, I like real estate. Other than owning physical property, REITs are a great way to go. This one, why I like it so much, is it has its top 10 companies. The stocks that I own separate are not in this top 10, which means that I am really diversified in the real estate market instead of like the financial one where I have Bank of America and it's one of the top 10 in that ETF. So this one, you don't see Realty Income, you don't see Vici, you don't see STWD. And so I really like that I'm invested in 3 other REITs that aren't in the top 10, which really makes me feel very well diversified. But I also want to add to this one as well because I think they have some great companies in here. The last one I'm going to buy is my favorite ETF, SCHD. This one is just a good mix of good dividend paying ETF, and it has some good growth to it. It's just a good mix. And SCHD focuses on those companies that have a history of increasing their dividend. And so you'll see here the top 10, and notice Coca-Cola's in there. And so that makes me feel, strong about my decision to buy more Coca-Cola. I just think they're a very steady dividend payer that increases their dividend. And I think this company has some potential upside, as they're not as diversified as Pepsi, but I think they can be. And so these top 10 companies are great dividend, solid companies, and this is just an ETF that I want to probably make it my top ETF in my portfolio. And so I'll be adding to this as well. Now, with all that said, I hope you guys, look at your portfolios and do an analysis of it. What sectors are you low in? Which sectors you want to boost up? Same with your individual companies. Make sure you're diversified. Make sure you're choosing good, solid companies. And, I like to do an analysis each month like this and look at where I'm at in my sectors, put some targets on your sectors, what percentage you want them to be of your portfolio and why, and believe in what you do and then do it. So this is what I'm doing. And I hope you guys share what you plan on buying, if it's any of these, or if you don't like any of the ones I mentioned and why. But I thought I'd share what I'm going to buy now in September. And so, with that said, I hope you guys have a great day, and we'll see you next time on Mark's Finance and Fitness.